Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
This is Financial Issues, where we help you defund darkness and fund the light by investing with biblical integrity. Folks, hope you had a wonderful day of worship on Sunday. Great to be back at it with you today. Seth Udinsky, Sam Case, and your host, Mark Manila, and you all with us as well. Mark, good morning, brother.
Good morning. How are you?
I'm doing great, man. A little tired from that loss of 1 hour of sleep, but I'm doing great otherwise. Not to start off with a rant right away. That was good.
I saw a report, Seth, saying they're like, going into daylight savings time, you might want to alter your sleep schedule 15 minutes every day. I'm thinking,
Smart.
my gosh, it's 1 hour, people. Get over
it. You're talking my kind of language there, Sam.
Are we on the West Coast where every 1-2 degree temperature change makes the difference? I was out there many years ago, and I was out riding my motorcycle. That's how young I was, in cut-off jeans and a T-shirt. Yeah, and how cool. Cut-off jeans and a T-shirt, and there was no helmet law there, so my hair was blowing in the wind, and I'm going down the road, and I'm looking at people, and they're in parkas because it got down into the 60s. And I thought to myself, I can't live here. Too many Nancys. I can't live here.
There you go. Fun stuff.
Really tough.
Listen, we made it, folks. Hopefully you all made it through losing the hour of sleep. And we're here at the new 9 a.m. It feels a little different, but it's still 9 a.m. Eastern time.
9 a.m.
610-363-1110. Listen, folks, we want to hear from you. Phone lines are wide open. We'd love to talk to you. 610-363-1110. Lots to talk about on today's show, your calls and questions. We'll see a controversial trading platform now offering early dividends. We'll talk about that if we have time. But before all that, Mark, you look like you have something on your mind this morning.
Yeah, I do. Last week we had a little, Sam brought up a little news about why geopolitical market shocks rarely last. And he went through the history and showed how, things like the average was down 1% for the first week. And the largest drop was in Germany, invaded France, and that was only 18%. I say only 18, that's a lot down. But within a year, almost everything was up 3% or more.
Almost always recovers, right?
Almost always recovered, right. And that's what's incredible. Well, I thought we ran through that a little quick last week because, wasn't it a neat, if last week's market was a roller coaster, we had a lot of fun, right?
We sure did. Up and down.
But it's not a roller coaster. It's our money. So I thought I'd take a little time just to say, hey, not making fun of it, not being careless or whatever, but we need to be serious a little bit about it. And not worry about it. I guess I just assume everybody who watches us has a deep relation with the Lord and their peace comes from God, but not everybody watching us has a deep relationship with Jesus or even a relationship with Jesus, the one true God, to have that peace that surpasses all understanding. And even if we do, I think there's some things we need to realize. And I thought maybe would be a good time to give some encouragement and help people realize that, yeah, we have history showing recoveries happen quickly. I did talk in depth a little bit last week about volatility, bandwidth. It's going to get wider. The ups and the downs are going to, swings are going to be more volatile during the war, during these time periods. And that's true. It does happen. It doesn't mean that it doesn't shake our psyche a little bit, and I want you to know that's normal. Don't feel bad about that, but turn to God. Just keep turning to God and do what He has enabled you to do. If you're praying and you're spending time with the one true God, and He still says, hey, I'm really worried about what's going on here. I want you to do something about that. I know He doesn't talk to me that way. I don't know how He talks to you, but He doesn't talk to me. But He gives me these tugs at my heart that maybe I should get a little more conservative in my investing, or maybe I should listen to that sleep factor tug is what I call it, and do something. So here's some thoughts. First of all, remain calm. This is normal of markets. When geopolitical things hit, the markets get volatile. They often go down, and we'll see the pullbacks. And remember, it's only temporary. It's like everything. It's like a haircut. It's like everything else. It'll grow back. It comes back. Those kind of things happen. Nothing to panic about. And God, this didn't take God by surprise. Trump actions or Iran's actions or Israel's actions or China's or Russia's or anybody's actions doesn't take him by surprise. We can be at peace and we can manipulate our way through these. And when I say manipulate, I mean use the functions God has given us. So here's some thoughts. Consider locking in some gains. If you haven't already yet, we've been talking about this for a while, even before the war started, when we started seeing the shift of money coming out of software and AI and moving into different sectors of the economy. We started talking about, hey, it's time to rebalance. It's the beginning of the year. It's a good idea to do that anyway. So go ahead and do that. Go ahead and rebalance. When if you have some great gains, lock those in while you can, if it's not too late already. And don't worry, if you have some losses, you'll need them at the end of the year, because if things move at the speed of Trump like they usually do with him in office, then this war will be over and we'll see a good market. Or we'll get used to this war and we'll see a good market. There's a good chance we're going to see a good market again, bottom line. So now's a good time to rebalance. But when you're rebalancing, here's the thought. Watch for some bargain buys, because this is like the Kmart blue light special.
It's a flash sale, Mark.
That's right. Yeah, exactly. It's a flash sale. There may be some really good bargains out there right now, because a rising tide lifts all ships, and a tide going out takes all ships down too. It's a broad statement in the market. When the markets start pulling back, it doesn't just pull back the weak and the ugly. It will pull back a little bit on almost everything. So there could be some really good buying opportunities coming up here. So, watch for those bargain buys. Companies that took a dive price-wise for what seemed like no reason, that, be watching for that. You make sure if a company still has financial issues still and still has the potential built into it, it might be a good buying time. So watch for that. If you can't find any bargains, don't worry. Just keep your powder dry, and either you'll be able to take some of that money and redeploy it into something new soon, or you might dollar cost average into some of those winners that pulled back that are pulling back as well. So I just want you to say, opportunity is here as well as concerns. Yes, we can't predict the future. We don't know if this is going to, in a couple of days, Iran's finally going to say, enough, we're done, please help us, or China's already saying, hey, we want to talk. Let's see if we can get this all straightened out. We need the oil that we're not getting anymore at half price. So everybody's wanting to talk again. So take a breath. Praise God and know that he's a good God. That's all. I really wanted you to know. And we'll get through this too. God knows where it's going, and it's perfect. He has a plan, and that plan will be implemented with or without our worries. God says not to worry about those things, that he's got it. Look at the birds in the field. If he provides for them, if he loves them, how much more so does he love you?
Worrying can add a single cubit to your stature, right?
Exactly right.
That's right.
Sam. It's a really interesting thing, guys. I was thinking about this as you were talking, Mark. None of us
could add wrinkles.
Yeah, there you go. None of us who's alive today lived through 1929. Nobody lived through 1929. We've heard about it as people hear about old stories. Many people lived through 2008, though. Actually, all of us did. Neither myself or Sam were in the markets at that point, but many of you were. But 2008 ended. 2008 came to an end. And then it got really good. And there was, and I think it's
1998, 99, 2000, 2001, exactly. We saw pullbacks. We've seen all sorts of stuff. And it's almost like nobody even remembers the years of the pullbacks, because it's a cycle. Things happen.
Yeah.
Breathe well, enjoy, spread the love is what I'd like to say. And that love, along with the gospel, just means caring for others, bringing joy into their life. It's a great time. When people get emotional because of they're focusing on the news cycle instead of focusing way on God, watch it, keeping their focus on God and what he's doing and trying to go where he's going and do what he would have us do. they start focus on the news cycle, they get emotional. During that time is a great time to sit down and share the love of God, share the peace of God with them. They're a little more open at that point. So he's creating opportunities, not only in the market, but also in the gospel. And I love that. I love the idea that we can come on the air and talk about those things, because that's what we're all about. And that's what hopefully you're all about. And you might have some questions about that. 610-363-1110. We'd love to answer your questions. We'd love to talk about what's concerning you in the markets right now. 610-363-1110. It's Seth, Sam, and Mark, and we'd be very happy to take those calls and walk through it together. We'll be right back.
I will end the government policy of trying to socially engineer race and gender.
Diversity, equity, inclusion. Hiring on the basis of race and gender. You don't see the problem here?
What was once a widely practiced program is now being abandoned at an incredible rate.
We will forge a society that is colorblind and merit-based.
Companies are making big changes. Money talks, so why not have it advocate for what you believe in? Get started today at financialissues.org.
Did you know that an unborn baby's heart beats at an average of 120 times every minute? That steady rhythm, that precious sound, that's the sound of life. Preborn partners with local pregnancy clinics across the nation to help mothers choose life, providing free ultrasounds, counseling, and the gospel of Jesus Christ. To give, just dial pound 250 and say the keyword baby. That's pound 250 baby. Baby.
You know, folks, if you're looking for even more in-depth insight and reason to take comfort and not to be afraid in these markets, you have got to check out last week's conference call. It was a really good one, Mark, and I so appreciate your heart on that conference call. Partners, that's up now on the conference call page, so please give that a listen after today's show. If you're not a partner, but you want to hear that wisdom on the conference call, you can become one today. It's very easy to do it. Just go to financialissues.org, and then you can get that conference call as well as past conference calls that we have up, and the next conference call as well, which will be April the 9th. So make sure to mark your calendars for that. Really good stuff there, Mark. Speaking of good news, guys, we are seeing some good news in the wages front, Sam. It looks like wages are outpacing inflation. Love to see that.
That's right. Bureau of Labor Statistics data coming out on Friday revealing a 3.8% annual wage increase in February, exceeding forecasts. The current inflation rate, meanwhile, is 2.4%. So that's a pretty good ratio we have going on right there. Employees on private non-farm payrolls saw their average hourly earnings rise by 15 cents in February. As of right now, the average earnings overall are around $37 an hour. So not too bad. What do you think, Mark?
Continuing the trend. We saw that in January, saw it in February. We talked about real wage growth last year. At the end of last year, we're seeing it continuously. The administration has brought down inflation to the norm, believe it or not, the average. It's within averages now of the norm for inflation, even though it's not where the Fed wants it.
It's above the goal. It's above the goal, Mark.
You know, I'd like to see inflation down to zero. A lot of people have this built into them that, oh, no, you have to have inflation or there's no job growth or there's no you don't. No, you don't. That's all an illusion. It's all something we've been programmed to believe. It is the central banks of the world who got together and decided we want X amount of inflation, and they keep that over, and that way they can expand the money supply, and the money due them is what it comes back to. But anyway, that's a whole nother story. We're talking about a positive thing called real wage growth, and that means that it's better than inflation, and it is. And we praise God that this is a trend now. It's several months old, so our administration is on it. Just one more thing we can say thank you, Trump, about.
Yeah, good stuff.
And cause somebody who has anti-Trump syndrome to head to explode.
Exactly right.
There's quite a few out there too.
Yeah. Absolutely. Listen, folks, if you've got it, give us a call. We'd love to talk to you about it. This is a conversation show, and so even if you disagree with something we say, we'd love to hear from you. 610.
Did you just say if you have anti-Trump syndrome, call in? Is that what you said? You said if you got it. So it's like, what's it?
If you have Trump syndrome, feel free to call in. Exactly right.
Yeah, I'd love to talk to somebody who could help me understand their position, because I don't understand it. But anyway,
well said.
That's it's good stuff.
Yeah, for sure. You know what might be or might not be good stuff here, guys? I'm having trouble telling. Robinhood is now launching what looks like an early dividends program this April. So, Sam, anytime Robinhood does anything, I'm always like,
a little bit of a red flag.
I'm not sure what's going on.
What do I think about this?
Give us the details here, Sam. What is this exactly?
That's right. So brokerage platform Robinhood launching a first-of-its-kind early dividends program in April. Dividends will be now available after a stock's record date. That's about an average of 17 days earlier, that is, and sometimes up to a month sooner than the average payout date for dividends. Just for a note, the record date is when a company identifies who its shareholders typically are. Most large cap U.S. stocks are eligible for those early payments, but shares held in an IRA will not qualify, at least as of right now. So my question about this, Mark, is this really going to make any difference at all? You're just moving around the date a little bit. You're kind of making a new dividend date. So does that make much of a difference for maybe some income investors?
Well, you know, I guess maybe 17 days can make a difference on your dividends. I don't know if it's 17 days, but it's somewhere around that is what it's looking like. But this is more of a marketing ploy than it is anything else.
That's what I was thinking.
Seems like it.
Yeah. Robinhood is actually lending you that money. They're not charging any interest on it, but they're lending you your dividends till the dividends come in. That's all they're doing. So they're trying to get their name out there more. They're trying to get people to switch platforms and say, well, I get my dividends early. I don't think this is going to make a lot of difference in most people's portfolio, but having a few days, I mean, if you have hundreds of thousands of dividends coming in, that would make you having millions upon millions of investments. You probably don't even notice that kind of money. And if you're not that kind of investor, then you have dollars and tens of dollars coming in, and you probably don't notice that money either. So I just think it's an advertising ploy.
That's right. Yeah.
And others might follow if they see Robinhood getting some traction on it more than just being brought up in the news.
Well, and again, guys, here goes Robinhood playing off of people's emotions and desire for fear and greed, more like, actually. Yeah. Makes sense.
But it kind of, the newness wears off after a while, because say you get the 17 days early for a couple years, that just becomes your dividend date in your mind. It doesn't really feel early anymore.
Right. There you go.
Yep. So a classic marketing ploy.
I did want to ask a question, just a general question, though. This brings up a question. Why is the record date and the dividend payout date different for companies?
Well, paperwork, for one. You know, first of all, there's a date that they do the declaration. Then they have to figure out who owns the stock on the record date. On that date, they have to figure out who all own those stocks in their company and how much they got to pay them. And then all that paperwork and the filings and the accounting go through, and then they pay it out. So they just want to make sure it's done right. Now, granted, it's based on antiquated accounting and everything, you know, everything being done by guys with quill pens and dipping their quill in the ink, and then
it can't be as antiquated as the government going down deep into the
it is the government.
Depths of the earth.
The SEC is the government.
Yeah, that's true.
Yeah. And they're the ones who oversee this. So, again, I really think things will be updated a lot in the next 5 to 10 years. You're going to see accounting become real time. You're going to see a lot of stuff change. So this may even fall by the wayside, quite frankly. So.
Good stuff. Appreciate you bringing that up to us there, Sam. 610-363-1110. Guys, as we talked about in the first segment, it was a tough week. The indices continued downwards Friday. Closing bell saw the Dow Jones down a full percent. The S&P and the NASDAQ each kind of around the 1.5% mark in the negative, and the Russell 2000 was down over 2 full percentage points as well. And similar numbers that we're seeing this morning also. Each of the major indices down in the pre-markets before we open up this morning. Mark, why don't we get to a question here? Steven is 58, and he's asking a really good question. He says, how does financial issues go about determining whether or not a company is biblically responsible? I know that many companies can be eliminated just by looking at their website, advertising, or the news. Other than calling investor relations and asking questions, what other less direct steps can you do? Mark, I've got one in mind here.
Well, why don't you share that then?
Helpful for Steven. Steven, our first line of defense here always is evaluator screening services. I mean,
Absolutely.
this is so important. It's our first move. It's the number one, Mark. I assume you would agree with me here. It's the number one trusted BRI screener today.
It's beyond the number one trusted. It is the most trusted, but it's also the most solid. Exactly. They just do such wonderful work. They do research. They just don't take something off the internet and say, well, so-and-so said this happened, and now therefore we're dinging it. Or they go out to some really left-wing or right-wing page and they take information off of it. Well, you don't know if that stuff's true if you don't have the backup. Evaluator makes sure they get the backup on everything they do, and they keep it. They have terabytes of storage for the history. So if you say, well, why did this company get dinged for this, and why is it clean now? And they can show you step by step the research they did, everything. They are not only the most trusted, they are who we trust 100%. They started it. They keep it going, and they're the strictest.
Yeah, and Mark, I'll just say this too. I mean, I've heard in the past criticisms, people saying evaluators too strict. They'll comb through everything, and we say, no, that's what we want. We want a screening service that's going to go so deep to dig out every little thing. We want to make sure that not a single cent of our money is being used to dishonor God. And
evaluators too strict. Is the sunset too beautiful?
That's right. Exactly. Sam, exactly.
Yeah, how about this? You're going in for surgery, a complicated surgery, and this doctor, this physician, and his team are doing research to make sure they do everything properly and they know everything about you. Do you say, you guys are just going too deep on this?
You guys are too thorough.
Here's your scalpel. Just dig in. Come on. No, you don't do that. And that's what we're talking about. We're talking about honoring God here. That's even deeper than your surgery. This is eternal. This isn't just temporary. This is God. How did, when he says, what did you do with what I gave you? And it's, you know what, Lord, I really listened to those guys on financial issues. They told me about evaluator services, which really bothered me because there's some things I had to sell that I could have made more money for you, Lord, but I sold them because they were offensive to you. And he's going to say, well done, good and faithful servant.
That's right. Yeah, it's awesome stuff. And Stephen, for you and for anybody else, you can get evaluator services on our website. Find the tool; it's under the resources tab. If you have trouble using it, like if you're not sure how or it's not working for you, just send us an email. You send me an email. Say, hey, I want to screen this, and this company. Can you screen it for me? And we'll screen it for you.
We'll screen it absolutely.
Real easily. Yeah,
and absolutely. We got some really good surprises coming up with evaluator services. But
it's exciting.
I also want to take a moment and say we got a way that it doesn't cost you anything that you can impact lives very heavily, and that's with the Children's Kids Club. I just love it. You just go online, and it's on our site. You just go and click on that, and you type a little message to a kid, and then it goes to the kids clubs and the Crossroads Kids Club, and they write it on a Easter card, put it in an envelope, and send them out to all the different kids clubs, and they're hand delivered to these children for you, and you impact their lives.
Yeah, it's truly amazing to get something like that. So someone taking the time to care about you individually. I love Crossroads so much. I compare them to Jonah going to Nineveh, going into the heart of darkness to preach the message, except they're actually willing to do it.
Their attitudes are way better. That's right.
Exactly. I think we all love them because they're reaching out. They're not asking people to come to the church. And by the way, they come alongside churches. They let the churches do the outreach. They go into the schools. The schools give them permission to have these after-school kids clubs, and they learn about Jesus there. And the schools love it, and the kids love it. And the churches start growing because some of the kids come to Christ, and then some of the parents come to Christ. It's an awesome thing. Crossroad Kids Club. Don't forget to go out there and send your Easter message to a kid, because you're going to change a life. That's what we're here for, to change lives, right? You and me and Sam and Seth, all of us, our partners, all our listeners. Let's change the world for Christ. Love that thought. Love the idea. 610-363-1110. 610-363-1110.
As a member of Samaritan Ministries, your monthly share is a gift that goes directly to a real person in need. While
my baby was like this big. He's like this tiny little spectrum of hope and this unnamed beauty, in a sense. It was poetic. And I saw his heart beating on the screen. And I mean, I went from, I don't want this baby, it's just a fetus, it's just cells put together, to talking to my child on the screen, and feeling really protective, and knowing that there's life growing inside. I mean, that sonogram changed my life. I went from just Candace to mom. I'm a mom.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
You're careful about what you bring home when shopping, especially when it comes to feeding your family. Shouldn't your investments work the same way? At Timothy Plan, we offer a wide selection of mutual funds and ETFs that can help you allocate assets without compromising your values. From technology to healthcare, energy to real estate, our funds are not only diverse but uncompromising to your values. Timothy Plan funds are filtered to avoid companies involved in abortion, pornography, human trafficking, and other harmful agendas. What you invest in should reflect what you stand for. Are your investments bearing good fruit? What's in your portfolio? Contact your financial advisor today to find out, or contact Timothy Plan directly at 1-800-TIM-PLAN to discover more. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential.
Love to hear from you, folks. Give us a call, why don't you? 610-363-1110, and check us out at financialissues.org if you want to learn more. Guys, speaking of evaluator services, we were talking about in that last segment. Mark, you had a great interview with the former head of evaluator services, David Hart. That was from March 3rd. It was at the end of the show, last segment. So if you want to listen more and get more information on evaluator, folks, check that out. That was during Mark's travel down to the Timothy Plan headquarters, which was cool.
It was a lot of fun.
Absolutely. March the 3rd is that episode there. Mark, let's get to Mike here. He's 69 years old. He's saying, hey, Mark, when a person draws Social Security, here we go, continues to pay into the system because they are
just a Monday. We can't even handle
this. We
We
can't have a
Sam, you got your
He's got the mute button ready. He's got it.
Okay.
Here's what Mike says. When they draw on Social Security yet continue to pay into the system because they're continuing their employment, does Social Security take that, the fact that although they're getting their monthly check, they're continuing to pay, into consideration and adjust their benefit upwards? It seems only fair to me that they do that. I hope my question makes sense. Just curious about this. Thanks so much. Mark, I'll let you take the lead on this one to save our listeners from a rant. So go ahead.
Let you catch your breath.
Give me a chance to calm down here.
Okay, calm down. Yeah, hey, Mike. A simple answer on that is yes, they do. Actually, they take it into effect. In fact, I'm going to toss it back to Seth just because I like watching his ears steam. But yeah, they do take that into effect. It usually shows up a year later if it had the impact it should have by working its way in the calculations.
Exactly.
Why don't you go ahead and explain that?
So Mike, here's how it works. I promise I won't get into a rant. So the Social Security retirement benefits are calculated based on your highest 35 years of earnings. That's adjusted for inflation. If you continue working after claiming benefits and your current earnings are higher than some of your earlier years' earnings, those new earnings can replace lower ones in the calculation. The Social Security Administration is thorough. Our government can be selectively thorough, and this is one of the areas that they are. They automatically review your earnings. They earn it. They review the record earnings annually. They recalculate your benefit if the additional work requires a higher amount for you. It's called automatic recomputation. So that's what happens. They're very thorough about this. The potential increase does depend on factors like your age and income as well. Mike, you're past that full retirement age. So that's kind of basically how that works there. Hopefully that can be helpful. So the
answer, simple answer is yes, it can impact the future.
Exactly.
If it's one of the higher years of the 35 years, actually.
Exactly.
So yeah, good question.
It's a good question. And Mike, I'll just tell you, now would be a great time for you to start drawing on if you haven't done so. And I'll gladly give you my bi-weekly government approved donation. That's all I'll say about it.
Whether you want to or not.
Whether I want to or not, it's yours, brother.
Government mandated donation.
Exactly right.
That's right.
Yeah. That is a good question. Mark, thanks for keeping me tampered there. As it were.
And thank you for maintaining.
You're welcome. You're welcome. Here's one from Rod. He's saying, hey, Mark, thanks for all your great work and insight. I'm looking to catch up my energy sector, and I heard Mark talk about the potential strength in midstream, an industry that I don't really have any holdings in right now. Is there a chance of any midstream companies being added to the buy list that aren't limited partnerships? I've been staying away from LPs because I need to keep tax reporting as simple as possible. Rod, you're speaking my language. Mark, what do you think? For Rod.
Yeah, keeping tax reporting as simple as possible makes total sense to me. Yet, we may be called to a higher calling because to whom much is given, much is expected. So what we have to do is, there are midstreams that aren't REITs, I believe. And yes, we are looking into that. In fact, I think we have some in our buy list, but I'm not certain. So your question brings up to me, why don't we take the time?
E62 and E63, but both of those are LPs.
Oh, okay. Limited partnership, master limited partnerships. Okay. So maybe you're going to have to stay away from those if you want to keep it simple. But I would say that shouldn't be the bottom line, unless maybe you're just, what's the best way to say this? If you don't want to complicate your taxes because you're doing a simple form or something like that, which I can't believe you're doing if you have multiple investment accounts, you probably should have the ability to take care of these MLPs and these K1s and the stuff like that, these REITs. I don't know why you wanted to stay away from REITs in general. Not all REITs are K1, but anyway, the way they're structured, it can get a little bit complicated. One of the things that Seth, Sam, and I have been talking about is the idea of coming up with a way to identify all our holdings that are K1 or require additional tax forms and things like that, so that going forward, people could look at that and say, oh, this is a K1. I don't want to deal with those. My CPA or my tax guy says he doesn't want to deal with those, as if it's a big deal. But, that way you can do it. I get it on some tax returns. If it's the only thing if it's going to cost you another $150 to $300 of preparation, and you're making 79 cents on it, you don't want to do that. I get that, but we'll look into it. And yes, there'll be more midstreams going on, and we'll try and identify that up front for you as we move forward.
Good stuff. Mark, here's an interesting question coming in from Bruce. He's 85 years old, and he's saying, hey, Mark, what is the meaning of BRI Watch? What is that?
You know what? BRI Watch is a term that when I came on to financial issues, it was already in place. And I asked the same thing, and I got several answers to it. But generally what it comes down to is that Evaluator Services does not have a BRI Watch. That comes from us seeing stuff on other services, and maybe something that one of us picked up on our own. And we're putting it on BRI Watch until all the research is done, either by Evaluator or Services or ourselves, to make sure that it is either true or not true. Because we don't want to accuse somebody of something on rumors or just possibly even misinformation. And we definitely don't want to invest in somebody if the information is true. So BRI Watch is one of those things that I would almost see it like a hold. We're not suggesting you buy it right now. Why don't you wait until we get to the bottom of this? We're not saying you should sell it right now. Why don't you wait till we get to the bottom of it? Would you agree as our historian?
Yeah, absolutely.
That's where it's at.
I think this is one of those, we would call it a tight hold, meaning not meaning you hold tightly to it, but you have a tight fence around it where you're not putting any money into it right now. Because there's a chance it could be non-biblically responsible. Don't dollar cost average. Don't add anything to it.
Don't knee-jerk react on it, because we don't have proof. Yeah. We don't have the proof of what is being said about it. Yeah. We just have evidence, or not evidence. What would you call it? Just rumor.
It would be a lot of smoke. That's usually the way I say it. There's a lot of smoke around a company, but we've yet to actually find the fire.
I would call it as as opposed to hard evidence, it'd be more like secondary reporting. And Mark, that even gets to kind of a bigger issue that Bruce is asking. And I'm glad he asked this, because it's a good question. There are other screening services out there. I mean, we all know that. There are some other ones. There are some well-known ones out there.
Right.
Why are they perhaps not as trustworthy, or maybe just not as thorough as one like Evaluator Services?
Well, historically, they haven't been correct a lot of times.
Right.
One of the services out there actually got fined by the SEC because they had different usage or biases built into some of their stuff. My understanding is, they didn't apply it the same way as they said it should be applied to the public and that kind of stuff. So there's just things going on like that. And the research depth is usually secondhand. They just saw this on something like HRC. What is it? Human Rights Campaign, which we can't trust because it's a left-wing organization, and even they say that they haven't verified the information, on a lot of the things that are in there.
That's being the case more and more as more companies want nothing to do with them. So they'll say, well, this company still has a 100%, even though we have no reporting from them at all.
Right. So it's secondhand information. There's no company like Evaluator that does the depth of research and proof that is needed for us to have an accusation that they actually have broken a biblical responsible screen.
Good stuff. Bruce, it's a good question, brother. Appreciate it.
Absolutely.
Mark, I think we can squeeze Kathleen in here. She ran across an email with a sell alert back in November for ASICs. This was when she asked the question, ran across the email, went to FISM's website for further research. She saw ASICs was still there. Was her timing slow, so she missed the window of the recommended selling? And can you clarify what's the deal with ASICs right now, basically?
Well, that's a really good question, because ASICs, fundamentally, they're strong.
Yeah.
They're still in place. Everything's good about them fundamentally. Potentially, they have great potential as well. in the industry they're in. So we don't know why it became an anchor in the ocean, why it's dropped like it did. In fact, that's one of the things that I'm researching now. I'm trying to find out. The only thing I can find is a lot of insiders in the corporation, a lot of executives have been selling off. Usually when insiders start selling stock, they believe it was near a peak. So their insider selling may have triggered bots to start selling, which then create more people to start selling in fear. Looking at where it's priced right now, it actually looks like it would be a really good place to get in. At this point, I don't have an opinion on whether it is or not. We still have it on our, I believe it's still on our buy list, isn't it?
It's not, Mark. No. So
it's on our hold.
Yeah. So we'd actually taken it off. Maybe we can bleed this into the next segment here, Mark, just to give Kathleen a bit of an update here, because there was some history behind this one. Kathleen, why don't you stay put, and then Mark, we can explain more on the other side of the break.
Absolutely. Yeah. Awesome. We're down to 13 seconds. 610-363-1110. 610-363-1110.
Here at Financial Issues, we believe in being faithful stewards of everything God has entrusted to us, and nothing is more important than investing in the next generation. Crossroads Kids Club is an after-school program that brings the gospel directly to elementary school children in public schools across the country. These aren't just programs, they're life-changing encounters that point children to Jesus and surround them with encouragement, mentorship, and biblical truth. If you feel called to be part of sharing the gospel with kids in public schools, visit reachourschools.com.
My baby was like this big, and I saw his heart beating on the screen. I went from, I don't want this baby, to talking to my child on the screen. That sonogram changed my life. I went from just Candace to Mom.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Folks, we'll get you if you call in right now, 610-363-1110. Give us a call here. We'd love to talk to you. Mark, Kathleen's question, she was asking about ASICs. So there was a little bit of history behind this I wanted to just share. We had issued a sell for this back in November as a kind of a tax loss harvesting play.
Yes.
We had so many big, we sold NVIDIA last year. We sold Tesla. So many big ones. This was one of those ones that we saw, hey, this is one that you can part ways with. We had the thought of maybe we'll put it back if there's a good entry point. Problem is it just like you said, Mark, it just anchored. It just kept on going down.
And it's still falling.
Yeah,
so
exactly.
Yeah, at this point, we're not saying it's a buy. We're not putting it back on the buy list yet, although it has everything there to do it. But what I'd like to see is a turnaround first and or us find out why this is sinking like an anchor.
A little bit of a falling knife right now.
Yeah. Good stuff. Mark, this next question is Jackson. He's 74. He says, I've had this stock since it first appeared on the buy list. It's MA64, only spiraled downward until recently when it slowly but consistently made its way back up, then surpassed my purchase price. The third quarter for this one was very disappointing where the earnings fell off a cliff. This was back 2025, the third quarter. What's the outlook for this holding of mine? Can you explain what's really going on, Mark?
Yeah, if you look at it, MA64 really is driven by pricing cycles and growth expectations. What we're seeing is it's a commodity type stock in iron. If you think about it, when iron ore prices soften, earnings can drop. The bottom line on it, the recent recovery in the stock really reflects the rebound in the commodity, not so much the structure of the company. I hope that makes sense. The structure of the company would be all its fundamentals, how it's ran, its earnings, all those kind of things, its margins, its efficiencies. But mostly the recovery was done because the commodity, we're seeing steel become a big deal. So the real question isn't whether, this company's price is, but why you own it. And I know that sounds really strange, but there's two reasons that you could own the stock. One would be for income, one would be for growth. And if you think about it, if you're income oriented, holding it for that reason, then it really doesn't matter if it's, as long as it's solid and not going out of business or something. If it's paying a good dividend, hang on to it. It's a great, it becomes more like a bond in that sense. But if you're seeking consistent growth and smooth earnings, this may be an opportunity to move your capital into a stronger stock. So it depends on how you're looking at it. If you're looking at both, you might just say, we're okay right now. And that's the bottom line on it. So why are you owning it? Is it for the income or is it for the growth or a combination of both? If it's for the income, maybe you sit still. If it's for pure growth, then there's other opportunities out there, especially now after the pullbacks, and I think we'll see more. So I hope that answers your question.
Mark, that is really well said, because these last 5 years for MA64 have been pretty volatile. And for some investors, that might keep you up at night. On the other hand, you got a dividend in the 7% range. That's not so bad either.
Right. Exactly.
So, yeah, I think that's well said. It's one of those you could really go either way. Mark, this next question came in from Kimberly, and we actually have a couple questions about this one. I'd be curious to hear your thoughts on this one. So Kimberly is the first one, 56. She says, I'm looking at Power Solutions International. It's now on the buy list, ticker symbol P6. What happens if U.S. tariffs and trade with China go further south than they already are now? Would this not impede P6's bottom dollar? I see P6's heavy reliance with China being a big negative. What am I missing here, and how do I justify this stock purchase? And similarly, Mark, John is also asking, are you recommending P6 for the long run? What do you think about this one?
Yeah, interesting, Kimberly. It's really a hard but simple question at the same time. I think that it's legitimate. Let's put it that way. Tariffs and geopolitical tensions, they can rock things, especially global supply chains. So we have to really think about that. But Power Solutions International is not primarily a China export story. It does receive some parts, and it does trade with China. There are all these things, but the reality is that they're onshoring some of that in the United States into the friendlier Western hemisphere, that kind of stuff. So I don't see it as a bad thing right now. I think we may be putting too much into the China connection there. I don't know. P6, the reason a stock like this makes the buy list typically comes down to earnings growth, industrial demand, valuation. It's not a risk-free company, but I don't see any panic here, is what I'm saying.
Absolutely. And Mark, I think it's important to mention too, there is a connection with China, but it's not an urgent enough connection for us to issue a BRI sell with it. Just because a company has a minor connection with China does not necessarily constitute a BRI sell. It would have to be a much larger Chinese influence, basically.
Well, absolutely. And we don't look for totally risk-free companies. There's no such thing. We just look for companies operating in strong sectors with a good portfolio of things in them. First, the financial issue, steel, and then the potential. Well, steel is a good place to be right now. Iron is a good place to be right now. So I hope that helps.
Absolutely. And Mark, this is, a good thing to think about this too. Like you said, strong earnings forecast, earnings grew well, manageable debt levels, all that stuff. And right now for value investors could be a good play because it has dropped. So,
well, it could be, I would be very careful at this time about moving into anything unless it turns onto a positive trend, because there still could be some more downside.
Yep, absolutely.
Just a little caveat there.
And hopefully for John, that was able to address your question also. I think it was. So great questions, both of you there. Guys, as we close the show here, an interesting story that I'm seeing. Sam, you had brought this to our attention. 86% of Americans want Meta and Google held accountable for addiction. Real fascinating. Can you give us the details here?
Right. So that poll is coming in light of that ongoing trial. In case you don't know about this, Facebook, Instagram, and Google, all of them are now facing a first-of-its-kind trial, I believe in California, accusing those platforms of basically intentionally addicting their users. I believe Mark Zuckerberg testified in that trial a couple weeks ago. The lead plaintiff in that case alleges that those companies deliberately addicted users, creating features that addict people to them, causing depression and suicidal thoughts, all those types of problems because of their addiction. However, attorneys for Google and Meta, they argue that those struggles are driven largely by personal problems rather than by the app's design choices. So, Mark, I just want to ask about this because I think what's interesting about this is balancing a company's responsibility to keep their consumers safe, but then also the consumer's responsibility to actually use the product in a responsible way. So what do you think about that?
Yeah. Well, I think personal responsibility has been terribly diluted over time. Where we're at in society, where everybody is the victim, I'm not giving them a buy, by the way, but please hear me out. I believe that personal responsibility has just been diluted to the point that everybody's a victim. It's nobody's fault. It's the devil made me do it, type of thing. Right. It's over and over like that. And I'm really tired of that. Let me ask you a question. Anybody have coffee this morning? Raise your hand. Well, look at all those hands go up, Seth. I mean,
got my hand up.
Thousands of people had coffee this morning.
Right, Mark?
Guess what? Coffee has been shown to be physically addictive. If you drink 2 to 4 cups of coffee a day and you stop drinking coffee, you get headaches. You start having withdrawal symptoms.
Mark, one time I forgot to drink coffee for a couple hours after I woke up. I'm like, why do I feel so awful? I'm like, oh, I'm in withdrawal.
Yeah. Exactly. So it does happen. There are addictive products that will destroy you, that can kill you if you get off them too quickly. The heroin type things and that kind of stuff. Now everything's an addiction. Well, okay, so maybe they are making their product more attractive and makes you want to attach to it and spend more time with it than you do your crabby sister or your mean brother or your not so friendly friends. That can happen, but that doesn't mean that it's going to cause you. If we take away your tablets and your screens, that you're going to go into convulsions. It just means you'll find something else to do with your time. So from my perspective, I think it's personal responsibility. And don't forget the parent factor here. Why are you letting your kids be online so much? I know lots of parents who limit their time to their children to be online, and their kids don't waste it with Facebook. They go to their favorite games that they play.
Now, speaking
they
of
could
games,
say those are addictive too.
Yeah, there was a lawsuit a while back for that popular game Fortnite, which a lot of kids play, and they were trying to say it's addictive. I'm like, well, is the argument that the company should make the game less fun? Is that the argument?
Exactly. Right. So isn't candy addictive to children? There's so many things we could say are addictive because we like them. What they're doing is they're switching out words for right now and making addiction a word that applies to anything you like. Well, I want to go over here instead of go over there. Of course you do. It's more fun over here. I don't like walking on glass barefoot over here. So I'm addicted to not walking on glass. Therefore, we got to sue the glass industry. Makes no sense. How about some personal responsibility? And your responsibility here is to go out to financial issues. Sign the Trump Kids account petition, please. We need tens of thousands so I can go to DC and deliver that. Also, Thank you for loving the Lord. Find that peace, find your peace there, and invest with biblical integrity, as I know you do. Thank you for loving the Lord and investing with biblical integrity, and thank you for being here with us. See you tomorrow.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.